Friends, welcome to Yadnya Investment Academy. Today we are going to talk about net profit of a company, also known as profit after tax. So what is the simple formula of net profit? Net profit is total income minus total expenses. Now what is total income? The revenue or sales generated by selling goods or services that the company produces plus some other income. Now, other income could be from the investments the company does, or certain assets the company has sold off, or some income from some litigation issues, etc. Now, other income is an occasional kind of an event. And revenue or sales is the primary source of income of a company. Now, what all comes into total expenses? The first is variable costs associated with producing goods or services. Now here costs such as raw material or labor cost etc., which varies based upon the amount of orders received by the company. So variable costs. Then comes operating expenses. Now these are fixed costs like rent, advertising, insurance, employee salaries etc., which do not vary based upon the work orders received by the company. So operating expenses are nothing but fixed costs of the company. As the applicable taxes the company pays would depend upon the profit made by the company would like to deduct all the expenses associated with running of a company. So, in total expenses, any other expenses would also be included if at all. It would also include depreciation of the assets of the company, and it would also include the interest paid by the company on any loans taken. So if you deduct all the costs except taxes, you would get profit made by the company before tax. Profit before tax would help you arrive at the amount of taxes to be paid, and once you deduct taxes from your total income, you would get net profit made by the company. Let us look at an example which would tell you how net profit of a company is calculated. What you see in front of you in this white box is the income generated by Maruti Suzuki India for the year ending March 2017. So what you can see here is revenue from sales, then some other revenues which gives you total revenue of the company. In the expenses section, you can see cost of raw material, depreciation and some other costs which add to the total expenses of the company. Please note expenses shown earlier did not include taxes. So total revenue minus total expenses would give you profit made by the company before application of taxes, and once total taxes have been deducted, it would give you the net profit made by the company. Net profit appears on the income statement of the company, and as it comes at the bottom of this income statement, net profit is also known as bottom line. Net profits show you how profitable a company is. And so a company which consistently gives rising profits is a good bet for investment. Net profit is used to calculate earnings per share. Earnings per share of a company is net profit divided by total number of shares. Like any other accounting figure, net profit can also be manipulated, and hence one should look at how it has been calculated before picking a stock for investment. So friends, that's all on net profit of a company, which is one of the most sought after figures when you choose a company for investment. So thanks for watching this video. Watch this space for more such topics. If you have any questions, do let us know in the comment section below our videos. And if you like our videos, please do subscribe and share. Before we end, we want to let you know that you can create your financial plan for free on our new portal, that is investyadnya.in. So please try it out. And another thing, you can buy our first book, which is a collection of 108 questions and answers on mutual funds and SIP on Amazon, Flipkart, etc. And the link to buy the same is mentioned in the description of this video. So see you in another video. Until then, happy investing.